Okay. All right, so they're recording the class. We can start. So the study unit that we are looking at today is study unit 5, which is processing of accounting data. So before we go to the question, I'll just give you a background of what the study unit is all about so that we are all on the same page. So when we talk about processing accounting data, accounting is about reporting the financial information of a business. So if you're a business, you sell goods, you buy goods, and all those kind of things, there is a system in which the goods enter your organization up until the goods leave the organization. So let's say you are a wholesaler, you are buying goods to resell. You're going to purchase the goods, and then when you purchase the goods, you bring them in, you check them to see if the goods are okay. If everything is fine, you record it as your stock. If something is not right, you take it back as your purchases return. Sometimes when you buy the goods from your suppliers, you may get a discount. So we have what we call the settlement discount and the discount granted. We're going to look at those terms as we look at this in detail. So when everything has happened, we have what we call the books of prime entry or the books of first entry. So when a transaction is initiated, where is it first recorded? It is recorded in the books of first entry, which are also called journals. So we've got different types of journals. We have a cash receipts journal where we record all the cash receipts. We have a cash payments journal where we record all cash payments. So in other words, if we buy something for cash and we pay using cash, we are going to record that transaction in a cash payments journal. And then we have a purchases journal. In a purchases journal, we are going to record what we purchase on credit. So all the credit purchases that we do, we are going to record them in the purchases journal. And then we have a purchases return journal. If we purchase goods and then for any reason, maybe we over purchased or the quality of the goods is not to our satisfaction, then we are going to return those goods back to the suppliers. So when we return the goods, we're going to record that in a purchases return journal. And then we have a sales journal. A sales journal records all our credit sales. If the customers return what we have sold, we are going to record that in a sales return journal. And then we have what we call a general ledger. So a general ledger is going to record every other thing that is not merchandise. So let's say, for instance, we sell the merchandise or the goods that we are mainly trading with in a business. We are going to record that in the sales journal. But if we sold any other thing that is not merchandise or trading stock, we are going to record that in the general ledger. So that is the difference between a sales journal and a general journal. So anything, if we purchase or sell merchandise, we use the purchases journal and the sales journal. If we purchase or sell any other thing that is not merchandise, then we record in the general ledger. And then we have the concept of VAT. Rather, before we even get VAT, so we said, Imani, can you please mute your mic? Kulani Vilagazi, can you unmute your mic? Okay. So we said the journals are the books of first.
Sorry, Dr. Biat, I just muted everyone. I closed all the mics. You can continue. Dr. Beata, can you hear me? Hi, Beata.
I can hear you. You had muted me.
Yeah, no, I'm just trying to give you more rights so that I can mute everyone.
Okay.
So you can continue while I will try keep on muting them one by one.
All right. Thank you.
Sorry for that.
It's okay. So we were talking about the books of prime entry. This is where we record all the transactions, or we group the individual transaction as we do them. So if we are buying if we are purchasing merchandise, let's say from different suppliers, we are going to record all the individual purchases in the purchases journal, and then we group the total purchases, the total sales, and we transfer them to what we call the ledgers, or the general ledger accounts. So we start with the journals, and then we go to the general ledger accounts. Now, when we go to the general ledger accounts, we have the concept of value-added tax. I'm sure you've heard the term value-added tax. Value-added tax is additional tax that we pay in South Africa for the consumption of goods and services. So if you are purchasing goods and you are registered as a VAT vendor, you are going to pay. Okay, everyone pays VAT, but the difference between somebody who is registered for VAT and somebody who is not registered for VAT is that the one that is registered for VAT is able to claim the VAT back from SARS. So on all your sales, you are going to account for output tax, and on all your purchases, you are going to account for input tax. So when you take the transaction, let's say from the purchases journal to the general ledger, you need to separate the amount that excludes VAT and the amount that includes, and the VAT amount. So when you pay your supplier, you are going to pay the full amount. So let's say you purchased goods for 1,150 rands. And then the 150 rand portion is your value-added tax, and then the 1,000 rands is the amount that is excluding VAT. So when you record, you are going to take the 1,000 to your purchases account, and then you are going to take the 150 to your VAT input account, and the full 1,150 you are going to take it to the creditor. So you are going to be able to claim the 150 from SARS only if you are registered for VAT. But if you're not registered, you cannot claim from SARS. Likewise, yes.
Sorry. Are someone working on the screen? The students would like to see the screen here.
Sorry?
Is someone working on the screen? The students would like to see what you have on screen.
Oh, okay. I'm going to put a question shortly. I haven't projected the question that we are doing yet.
Okay.
So I'm just giving a background to what we are going to do so that when we go to the question, then they can understand what we are doing.
Okay.
Yeah.
Sorry, can I just ask a question, please?
Yes.
Sorry, going back to the purchase journal and the sales journal, you were saying that those are only cash purchases, right? So if it's the purchases are or the sales are on credit, where would those be recorded?
Okay, I said we have a cash receipts journal and a cash payments journal. So the cash journals record all the cash transaction. If we purchase on credit, we are going to record in the purchases journal. If we sell on credit, we are going to record in the sales journal.
Okay.
Yes.
Thank you.
Okay.
Sorry, may I have one question, please?
Yes.
I just needed to know, are you sharing your screen currently?
No, I'm not sharing my screen. We are going to do a question now. I'm going to project the question on the screen now. So I said I'm giving you a background so that when we do the question, then you understand the concepts that are covered in the question.
No, not said. Thank you.
Okay. Okay, so where was I? Please remind me. If you were
VAT
paying
input and output.
VAT input and output, yes. So when we record, we must separate the amount excluding VAT. So if it's purchases, we are going to separate the purchases amount from the VAT input. If it's sales, we are going to separate the sales amount from the output tax. Okay. So I am trying to share my screen now. Can you see my screen?
Yes.
Okay. So this is the question that we are going to do today, which is based on study unit 5. So I just gave you a background of the key terms that we are going to encounter in this question. So I've explained to you the types of journals, which are the books of prime entry, and I have explained to you how we transfer these amounts from the journals to the general ledgers. So the key thing that you need to understand here is that if a transaction has VAT, when you transfer the amount to the general ledger, you're not going to take the amount inclusive of VAT. So depending on whether it's purchases or sales, you need to account for output tax and for input tax. So in this question that we are doing, we have a small trial balance there where we have the bank balance there. We have bank, we have purchases, we have trading inventory, we have sales, we have VAT input, we have VAT output. And then it says the following subsidiary journals, of which only the totals of the columns are shown, appeared in the accounting records of ABC dealers as of 28 February 2025. So we are given the cash receipts journal. What did we say about the cash receipts journal? The cash receipts journal records all the cash that we receive, ne? And then the cash payments journal records all the cash payments that we make. So you will see that we have purchases here. So these are all the purchases that we did, that we purchased on cash, and then trade payables control. So it means we paid our creditors here by cash, and then this is the portion of the VAT input, and then this is the VAT output. So if ever there was any adjustment to correct input tax, we would have to adjust by accounting for output tax. And then we have settlement discount received, and then we have sundry amounts, which relates to any other things that we purchased for cash. And then we have the sales journal. So the sales journal is going to record our credit sales. So you will see here that the trade receivables, the total amount of what we sold is 16,100. But when we account, we need to separate the sales from the output tax. So the sales portion is going to be 14,000. And then this is the VAT portion, which is 15% of that amount. If you add these two amounts, they're going to give you 16,100. By the way, we are still reading the question. We are not doing it as yet. And then we have the sales returns journal. So the sales returns journal, we spoke about the sales journal where we record all the sales. And then the sales returns journal, we record any other thing that is returned by the customers. So anything that is returned is not recorded in the sales journal, but it is recorded in a separate journal, which is the sales returns journal. So that's why these amounts are not recorded here in the sales journal. Where is our sales journal? That's why the returns are not recorded here, because they are not recorded in the sales journal, but they are recorded in a separate journal that is called the sales returns journal. So the same thing applies for the purchases return. If we return anything, we are not going to record it in the purchases return, but we are going to record it in the we are not going to record it in the purchases journal, but we are going to record it in the purchases return journal. So now the question requires us to prepare the following general ledger accounts. So those are the general ledger accounts that are listed below. Remember, we said the sales journal are the books of first entry. So they record all the information, and then we sum up the information, we transfer it to the general journals. So now we are going to see how this is done in the general journals. I can see somebody has their hand up. I don't know if they have a question. Ramotibe.
No, let's continue with the question. I'll ask later when we are starting with the calculations.
Oh, okay. All right. So now, when we go to these journals, we now need to go back and think, okay, what do we record in the bank account? What is a bank account? So a bank account is just think about your own bank account. If you have a bank account at a capital, let's say Capitec Bank, what does your bank account contain? So your bank account contains your money or cash. So it's either the bank account receives money or the bank account takes out money. So the bank account can only have receipts that come in and payments that go out. So the things that we are looking at in the bank account, what balance did we have at the beginning of the period? How much did we receive in form of receipts? So the receipts would constitute all the money that comes into your account. And then how much money did we take out of the account? So that is going to constitute all your payments. And then the difference between your opening balance, your receipts that came in, and your payments that went out is going to give you the closing balance at the end of the period. So now let's go back to the cash receipts journal. So remember I said the journals are the books of first entry or the starting point. And then we take the totals from the journals, then we transfer it to the ledger. So now you will see that in the cash receipts journal, there's a lot of things that went on. We recorded sales, we recorded trade receivables. So this is the amount that we actually received for stuff that we sold on credit. When the debtors paid and we received cash, we recorded it in the trade receivables control account. And then settlement discount granted. This is what we gave to our customers when we sold. And then the VAT output, this is what we use to account for VAT that we pay over to SARS. Remember, we said when you are registered for VAT, you need to pay a portion of your sales to SARS. And then when we have a settlement discount granted, it's going to attract VAT, because now if we give a discount, it means we are not going to receive that entire money. So if, let's say, for instance, we had sold something for 1,000 rands and then we give discount for 200 rands, it means we are not going to receive 1,000 rands. We are going to receive 800 rands, because the 200 rands is what? Is discount. So now we had accounted for output tax on the full 1,000 rands. So if we give discount on the 200 rands, it means we must adjust our output tax. So you will see here that we gave a discount of 200 rands. So because we gave this discount of 200 rands, it means this VAT output that we have accounted for must be reduced by the portion of the VAT on this discount that we are not going to receive. So that is why now we are debiting input, so that we reduce this output tax that we had declared to SARS. So anytime if there is an adjustment that touches our output tax, to correct it, we need to debit input tax. And if it's in the input tax account, if we need to correct it, then we are going to credit the output tax. So that is how we correct our input account.
Sorry.
Yes.
So you're saying the settlement, so the VAT output is calculated based on the original price, and then the VAT input is the VAT on the discounted price.
So the VAT output is is charged on sales. So if you sell anything, you are going to charge or account for VAT. I think account is the better word that we should use. So whatever you have sold, you need to take 15% and give it to SARS. So
Yes.
now I was using 1,000 rands as an example, saying
Yeah.
if we sell something for 1,000 rands and we give a discount of 200 rands, it means the money that we are going to receive from the customer is 800 rands, not 1,000 rands. So if we had accounted for output tax on 1,000 rands, it means the output tax that we have accounted for is overstated. So now if we have a settlement discount, it means the output tax must be adjusted or must be corrected. So if we want to correct the output tax on that discount, it means we must debit input tax. So because we have a settlement discount granted, the VAT input there is to adjust the output tax on that settlement discount granted because we are not going to receive that amount. So we need to reduce our output tax.
So, but the amount that you put in the VAT input, is that now the discount on the settlement, on the discount amount?
Can you repeat that?
So the amount that you've put in, that you will put in the VAT input column to balance it out, do you get that amount by working out the VAT on the discount amount?
Yes, that amount is on the discount.
Okay, thank you.
Yes. So we know that our VAT is 15%. So if you
Yeah.
calculate 15% of the 200 rands, it's going to give you 30 rands there.
Yes, okay. Thanks.
Yes. So that is going to reduce then the output tax. So now all this is happening in our cash receipts journal. When we go now, the question says we should prepare the bank account. So remember I said in the bank account, there's 4 things that we are going to expect to see there. We expect to see the opening balance. We expect to see the total of all the receipts that were received during the period. And we expect to see all the payments that went out during the period and then the closing balance. So for us to get the total receipts, we need to find the total from the cash receipts journal. There was a hand that I saw up and then it went down.
I'm sorry, ma'am, that was a mistake. I'm sorry.
Okay, all right, it's okay. So now let's determine the amount that we are going to take to the bank account. So we have the sales amount. So we sold. So we received 18. Tulani, can you mute your mic? So we received 18,600. So we are going to take that and then we add the 6,555 that we received from debtors. And then we are going to subtract this 200 rands because we are not going to receive it. It's discount that we gave. And then we are going to add the output VAT. Remember, even though this is going to SARS, it's part of what we received as cash. So we are going to include it as our receipts. But the other leg would then be the VAT output. And then we are going to deduct this 30 rands that is adjusting for that discount. Then it's going to give us, so if you add that together, you should get, you've got your calculators. I hope you're calculating with me. So you're going to get the balance of the receipts that is going to the bank account. Is everyone clear and happy with that?
Ma'am, can I get some clarification?
Yes.
Are these the totals of sales? Like, is this like the sales that we've made throughout the whole year? Like, for example, the whole year, or are these like for like a specific day or something? Can I just get clarification on that?
Okay, so this information, if you look at that statement above, so it says it appeared in the accounting records of ABC dealers at 28 February 2025. So this is the year, and this information relates to the entire period. So this information relates to the whole year. So we are trying to determine the actual cash that we received in our bank account. So the cash that we received in our bank account, either it was from sales or it was from cash that was received from debtors or trade receivables.
Okay, I get it. Thanks.
Okay, there is a hand up. Okay, so I'm going to show you just now how the general ledger account is going to look before we. Yes, you can talk.
Sorry, ma'am, may I interrupt?
Yes.
To add in order to get the bank amount. That one I just got lost a bit. May you please explain that?
On the cash receipts.
Yes, cash receipts.
Okay, so I said we are going to add all these amounts. So we are going to add the 18,630, the 6,555, and then we deduct the 200 because this is the discount. We're not going to receive it. So we take it out, and then we are going to add the 2,430. Remember, even if this is accounted as VAT output, we still received the cash. So here we are looking for the cash that received. So we are going to add it so that we determine how much cash was received. And then we take this out because now we need to adjust the output tax by that amount that we are not going to receive. So it's a total of all these amounts.
Thank you very much. I did get that. Thank you.
Okay.
Sorry to interject, ma'am. I just wanted to ask, what is the difference between sales journals and your CRJs? Like what transaction do we add on sales journals and purchases journal?
So in the
there's totals there. Like how did we get to those totals?
In the cash receipts journal, we only record cash transactions. In the sales journal and the purchases journal, we only record credit transactions. So your cash sales and purchases, they go to the cash journals, and then your credit sales and credit purchases, they go to the sales journal and the purchases journal. So the difference is that the other one records the cash transactions, the other one records the credit transactions.
Okay, thank you.
Okay.
Sorry, but if that's the case, right, that the sales journal and the cash receipts journal, but that's all money incoming into your bank, right? Whether it's cash or on credit. So shouldn't the cash receipts journal and the sales journal affect your bank?
So in the bank account, if you sell something on credit,
yeah,
do you receive money in your bank account?
Well, not initially, but every month.
So let's go back to the cash receipts journal. Can you see the third column which says trade receivables control?
Yes.
So when you start receiving money from the customers, then that's when we bring it to the cash receipts journal. But initially, we are going to record it as a receivable. Then in the sales journal, then when we receive the cash, then we bring it to the bank account because we want to account for the actual cash that was received. So we want to separate the actual cash and the credit sales, because with the credit sales, yes, as a business, we expect to receive the money, but it's not guaranteed that you will receive the money. So sometimes the debtors will pay, sometimes they're not going to pay. So if they don't pay, that's where we have something that we call allowance for credit losses. So you sold, you expected to receive the money, but you need to take into account that there's a chance that you won't receive all the money. So you are not going to recognize it as cash until you have received it. So it's not
Okay.
going to go into your bank account until you have received the cash.
All right, I understand. Thank you.
Okay. All right. So we
Doctor,
have.
I just need clarity on one thing. If we include sales in the bank, what about the sales of 400,000 in your trial balance?
Okay, these cells that we have here in the cash receipts, these are the cash cells. These are the cash cells. Remember, we are saying we are differentiating between the credit cells and the cash cells. So anything that appears in the cash receipts journal is your cash cells. If it doesn't appear in the cash receipts journal, then it means it was on credit.
Can I also add to that?
Yes.
So also remember, you are being asked for the transactions in the bank account for the month of Feb. But if you see that those sales in the trial balance, those who are there at the beginning of Feb. So the transactions you're going to take into account are those that happened at Feb. That's where the 27,000 comes in.
Is everyone happy? Okay, Kumuto, your hand is up.
Yes, ma'am. I just have a question. Like, I don't have a problem with like calculating that, right? But I wanted to know like the minus or the bracket sign, like in terms of like you see in cash receipts journal, there's a negative for VAT input, and then on the CPJ on the VAT output it's negative. Can you please explain how we put why we put brackets on input and output, and yeah, please.
So in the cash receipts journal, every other thing that is not a bracket is coming in. So what is in brackets is going out. So this 200, the settlement discount granted, we are not going to receive it. So we need to take it out. So that is why it's in bracket, because it's reducing the cash that we are going to receive. And then the VAT input, it's in bracket because it's reducing the VAT output that we are accounting for. Remember, the moment our sales amount goes down with the discount or by the discount, it means the VAT output is also going down. So this is just reducing that.
Okay, thank you.
Okay. So when we go to the purchases.
Sorry, ma'am.
Yes.
Sorry, ma'am. Sorry to take you a little bit back. I didn't get. How do we calculate the VAT output?
It's 15%. So, okay, how do we calculate VAT in general? So VAT is levied at 15% on the goods and services that you buy or you sell. So we have a situation where an amount includes VAT, and we have a situation where an amount excludes VAT. If an amount includes VAT, let's say for instance, you buy something for 1,150, and that 1,150 includes VAT. So for you to calculate VAT, you're going to use what we call a tax fraction, which is 15/115. So you only use the tax fraction if the amount includes VAT. If the amount doesn't include VAT, then you are going to simply multiply by 15%. So the 1,150 would be multiplied by 15% if the amount doesn't include VAT.
Thank you. I understand. So in this situation, the VAT output, do we add all these numbers, then we calculate the VAT output, or how do we do it? Sorry, I'm just going back because I just got into this lesson late.
Okay, so my assumption for this question, my colleagues will assist me. Tolisa, do you want to assist me in answering that question?
Calculate this VAT.
Yes.
I don't know. I don't know if the 2430 is exactly 15% of the sales. I can see that 30 is definitely 15% of the 200. So I don't know. It could maybe just be.
Yeah, so I was going to say my assumption is the amounts would be calculated and given to you so that you don't have to calculate them. Wherever you need to calculate the VAT, the information would be given in such a way that you can see that you need to calculate the VAT portion. So in this particular example, I think it has already been calculated for you. So it will be difficult for you to recalculate how they got to that amount. But colleagues, you can assist if you have
I think you don't have to worry about it for this question. If you are specifically asked, then you will take 15% of whatever your sales amount is.
Okay. Thank you so much. I'm answered.
Okay. Ndlovu, your hand is up.
Okay, good evening, Doctor. Well, in terms of the question that was asked by my fellow students, well, I did try to attempt this tutorial. What I have noticed is that for the sales amount, which is the 18,630 times 15 over 115 rands, it gives us the amount of the VAT output.
Oh, okay. All right.
Yes, because I did try attempting the tutorial, and also I was even confused why is the sales amount inclusive of VAT, because in the previous activities that I've tried, it was not inclusive of VAT, but the amount that was inclusive of VAT, it should be under the bank column. I don't know whether I'm making sense.
Okay. All right, thank you for that. So that VAT output then was calculated on this 18,630.
Yes, correct.
Okay, Ntombi.
Do you hear me?
Yes, we can
Hello?
hear you. Yes, we
Yes,
can hear you.
Yes, I have a problem here with signaling. It's just I want to go back on the VAT as my fellow student was busy asking about it. So on my understanding, you said when you buy or sell any goods, anything, there is a VAT that is calculated, which is the 15%. I am correct on that?
100%.
Okay. Yeah. Thank you very much, Doctor.
Okay. All right, let's move on then. So when we go to the cash payments journal, here we want to determine what went out of the bank account. So the concept is going to be the same with sales, but now this time we are now just looking at purchases. So this is what we purchased for cash. This is what we paid, the 7,245 relates to the cash purchases. The trade payables control is what we paid for what we had initially purchased on credit, then now we paid for it. And then the VAT input, this is the portion of VAT on the purchases, and then the VAT output. Now you will see, just like the previous one, we have a settlement discount received. So if we have a settlement discount received, it means we are not going to pay that amount anymore. So with VAT input, we were going to claim or receive that amount from SARS. So we are not going to claim that amount anymore. It means we must pay it over. So that is why we are crediting output tax. Can you switch off the mic? Okay, so now we have to credit output tax to adjust for this amount that we are not paying anymore. And then the sundry would be any other thing that we purchased. So that we also purchased for cash. So again, if you take the total of this, then it's going to give you the total cash that went out of the account. So I'm just going to switch to another screen. So now, if we go then to the if we go to the bank account, so we have the opening balance, the 2,150. So the opening balance is coming from sorry, I've accidentally closed my page. Let me open it again. Please bear with me 1 second. Can you see my screen?
Yes.
Yes.
Okay. So which one are you seeing, the solution?
Yes.
Okay.
Yes.
So the 2,150 is coming from the trial balance. So this is the opening balance that we had in the bank account. And then the total receipts are coming from the total then that we derived from the receipts, the cash receipts journal. And then the total payments are coming from what we derived from the total payments journal. And then the balance is going to be, this is the balancing figure or the balance carried down. So after all this, we started with a balance of 2,150. We received an additional of 27,385. We paid 17,973, and then we remain with 11,562. So this is the bank account in the general ledger.
Sorry, Doctor, I'm sorry to interject. So I just wanted to find out, you said balance is the balance brought down from the tried balance. Is it only just for sales, or is it only sales and payment? Or I see there's total payments on the right-hand side. So on the balance, is it a total of sale from the tried balance?
So this is the opening balance in the bank account. So this is what you started with in your bank account. But where do you get this amount? You get it in the trial balance. So this was given in the trial balance. Let me quickly go back to the question. Can you see the question now?
Yes, I can see it.
So you see, this is the balance of 2,150. Remember, the trial balance is just a list of balances. So this is the opening balance there. You see, this is at the beginning of the period. This is on the 1st, this is on the 28th. So when we started, the opening balance was 2,150, and then we take our movements, and then we get the closing balance.
Okay, thank you. Understood.
Okay. All right. Everyone happy?
Sorry, just on the bank general ledger, if you look at the solution. So the balance from March 1, would then that be a trial balance given again? Because that's not given to us now. Were they just adding it? Or where would that come from?
So the trial balance then for the 1st of March for the next period, this will be your opening balance. So this 11,562 is now carried to the next period.
But this is our solution, right? So we would have had to find that figure. Where would that figure have come from?
This is the balancing figure. Can you see the solution page?
Oh,
Can you
it's
see?
there from the payments. Okay.
Yes, so this is the balancing figure. So the balancing figure is, you see, it's the balance carried down. So it's what you
I
take
see.
to the next period.
Okay, I see.
Okay.
Thank
Is
you.
everyone happy with that? Okay. So
Yes,
now
yes.
let's go back to the purchases, to the next so that the next part is the purchases. So now if we go to the trial balance, we had an opening balance of 192,000, and then what happened during the period which affects our purchases, we need to look for that. So we have credit purchases here of 9,200, so we need to account for this. And then in the bank, in the cash payments journal, we have those purchases for 7,245. We need to account for that. Okay. So when we take it to the purchases journal, this is where we now split. We are going to take only the 7,245, and then the VAT input is going to go to the VAT input account. So these, they don't go to the same ledgers, they go to different ledgers. So we are only looking for this purchases amount. So let's go to the general ledger. So we have the opening balance of 192,000. We have the purchases for 9,200, which came from the purchases ledger. And then we have the purchases for 7,245, which came from the cash payments journal. So we have no other movement on the other side. So it gives us a total purchases for the period of that amount, 208,445. Is everyone happy with that?
Yes.
Okay.
Yes, yes, yes.
Can I ask?
Yes.
Why are we debiting the purchases and
Now,
not crediting them?
now we are in the general ledger. Purchases are an expense by nature, because when you purchase, you are incurring like a cost. So purchases are an expense and they have a debit balance. So we are going to debit the purchases because we are creating an expense, which is purchases.
All right, understood.
Okay, so the contra account or the other leg would then, if you purchase, you debit purchases, you credit bank, or you credit trade payables. So purchases always have a debit balance. Okay, so the next account that we needed to do was the trading inventory. So the trading inventory is talking to your inventory balance. In the trial balance, we had an opening balance of 52,000. Now, if we look at these transactions, do we have anything that affects our inventory? Do we have anything that affects our trading inventory?
It's only on the trial balance, but not in the journals.
It's only on the trial balance. So when we do our general ledger account, then we are just going to have that balance brought down. There is no other movement that affected our trading inventory. So we just put the balance brought down and then we leave it like that. If we had any other thing, then we would record. But with this information that is given, it's just that one line item that we have. So we are only going to record that. Any questions?
Hi, ma'am.
Yes.
Didn't you say that when we sell things on credit, like inventory, that's when then we have to record that in the purchases journals and whatsoever. Why then don't we have anything on the trading inventory?
Can you please repeat your question? I didn't quite get you.
I remember you saying that when we sell things on credit or inventory on credit, we have to record that in our purchases journal and sales journal, right?
Mm-hmm.
Why then don't we have anything on our trading inventory account in the general ledger?
Okay, so now in a business, it depends on the nature of the business, on the nature of the business or what the business is dealing with. So we have some businesses that purchase merchandise for resale. We have some businesses that make their own merchandise, if I may say that. Let's say, for instance, our business was making biscuits, then we would buy flour and all the other ingredients that we need. Then we make the biscuits and then we sell that. So depending on the nature of the business, we will have inventory. Ne? So for us to determine, I don't know if you have heard of what do you call that? Cost of sales. Have you ever heard about that?
Yes, I have.
Okay, so now you would take to determine the cost of sales, you would take your opening inventory, add purchases, and then less closing inventory, and then you determine your cost of sales. But for you to be able to determine the cost of sales, it's important to determine the purchases. So the purchases is what was actually purchased during the period. So what we are looking for here, we are looking for what we purchased and not what was in stock. So the trading inventory refers to what was already in stock at the beginning of the period. So we are looking for what we purchased. I don't know if that makes sense.
Okay, yeah, that's understood.
Okay. Any other questions?
Hi, ma'am.
Yes, ma'am.
Can I ask?
Okay.
Can you please go back? Yes, thank you. I wanted you to go back to the cash payment journals. Right. We said that the VAT input is calculated on the total sales, right?
The VAT input is on the purchases. The output is on the sales.
Yes, like I want to refer to the cash receipt journal before I can ask a question about the cash payment. We said that we calculated the VAT output on the total sales, right?
Yes.
And now the same is what's gonna happen when you calculate the VAT input on the purchases for the financial year, right? Sorry, ma'am. Can you hear me?
Yes, I can hear you.
Yes, so I'm a little bit disturbed about the balance of the VAT input because on the purchases it's 7,245, but the VAT input amount it's not corresponding to what we have on the purchases. So I want to understand like what happened with the amount for the VAT input for purchases.
Okay. So as I was saying that I think for this question,
Ms. Dr. Sibanda?
Yes.
Yeah, student must understand this is scenario. Then there is a required where we require them to do general ledger account. They must not worry about they must not worry about the VAT input from maybe why the VAT input is not calculated on purchases, for example. This is a given scenario.
Oh, okay. Thank
Yeah.
you. So now I get it. Okay, thank you so much.
Okay, thank you so much for that. So yeah, this is what I was trying
Sorry,
to say.
ma'am.
That
Ma'am,
there's an echo.
hello.
Yes. Are we on the same page?
Hello, ma'am, can you hear me?
Yes, I can hear you.
Ma'am, I'm completely lost. Can we just go back to the cash receipts journals and the cash payment journals, like the VAT? I understand everything else, but the VAT input, output, and the VAT input, I just got lost from there. I think most people can attest to that. Like, I'm just confused in terms of the VAT output and the VAT input. I know how we arrive at those numbers, but where you get to the point where we say VAT output debited, that's where I get lost. And for the cash payments, we say VAT output credited, that's where I get lost. But I know where the numbers come from, but I want to understand why do we say debited and credited, please.
Okay. Guys, can you please try and mute your mics because there's an echo.
Can you please mute your mic?
Mr. Mokokon.
Hello?
Okay,
the echo.
Yeah, can
The
you
echo.
can you please disable the mic so that you can only take hands? Otherwise, then we were gonna ask the students to mute themselves until we finish. Just disable the mics, and then those who want to ask questions will just take their hands. Thank you.
Okay, thank you, Mr. Stole. So the question was, how do we know when to credit or when to debit, I think. So let's talk about the difference between output, VAT output and VAT input. VAT output is levied on sales. So every time when you sell something, you must take 15% of that and give to SARS. So you are going to credit your sales account and then you credit your VAT output. So your VAT output will have a credit balance and then your sales will have a credit balance, such that if you add the two credits, you are going to have the total sales. Ne? So you have credited your VAT output, and then you debit your sales. So if you debit your sales with the discount granted, you are reducing the money that you expect to receive. So because VAT output is charged on the amount that you expect to receive. If you reduce the amount that you expect to receive, it means that the amount that you must pay must also be reduced. So since VAT output has been credited, how then do you reduce a credit? You are going to debit. So when you reduce the VAT, you are going to debit the input. So what happens is, if you reduce your VAT, you debit the input. When you debit the input, you are increasing the amount that you can claim from SARS. So there was 2,400 that you were supposed to pay. So if you debit VAT input, you are reducing what you were supposed to pay, because at the end of the day, you are going to take what you are supposed to pay to SARS and what you are supposed to claim back from SARS, and then you find the difference. Then the difference, depending on whether it's a debit or credit, would be either an amount that is payable by you to SARS or an amount that is refundable to you by SARS. So if you need to adjust output tax, you are going to debit input tax. By debiting input tax, you are decreasing output tax. If you need to adjust input tax, you are going to credit input to output tax. By crediting output tax, you are reducing input tax. So what you can claim from SARS in the case of this payment, you are not going to claim 1,008 anymore. You are going to claim less by 15%. So the reduction then goes to the output tax account. Does that make sense? Okay, I see Koketso, your hand is up. Facilitator, please assist. There's a few students that have their hands up.
Okay.
Hi, can I ask my question?
Yes, please.
Okay, no, I was following you quite correctly on a cash and then also on purchases. My questions was on trade receivable. Can you please go up the first on the first on top where it's showing all what the trade receivable, because I'm confused now when you only take that 52,000 and leave the other trade payments, controls and all. May you please go up on your page? I will show you. Yeah,
The trading inventory.
There is your 52,000 there. It's for trading inventory. You only factored that only.
Okay,
because
so
sorry
can
to
I
interrupt.
just interject a little bit? So you see, this is the opening balance at the beginning of the period. Ne?
Yes.
Now, the information that we have here, that's why I gave that example of cost of sales, that you're going to have your opening stock at purchases less closing stock. So the line item that we are trying to determine is the purchases. So how much did you purchase during the period, so that you can be able to calculate your cost of sales. So we are only looking for the purchases. That is why we only looked at that, because we need to separate that. So now we've got different line items. The line item that we were focusing on here is purchases. How much did we purchase during the period? And then this trading inventory, this is what is coming from the previous period. So if at the end of the period we have determined our actual closing inventory, then we would put it here. Let me go back. If we determine our closing inventory, then we are going to take this out and then we put the new closing inventory for the period. So the trading inventory will always have the actual physical stock that is at hand at the end of the period.
Okay, all right. May we please go back there on the purchases and also on cash?
Yes.
Yeah, I need to know, not there on the other tab. Yes, so that's why I was saying that. Yeah, on that tab. That's why I was saying that on bank, I was following you quite correctly, even my calculations are fine. Also on purchases. And then on the trading inventory, I understand what you're saying, that we must factor it. It's only that's inventory. What about here on purchases, the trade payable control? Because on my mind, I thought you was gonna include that. And what about don't go too far. Yeah, just there. I was looking at the trade receivable control and also the trade pay. So are you not gonna, are they not going together with the trading inventory?
Okay, I'm going to ask my colleague Polisa to assist me. Maybe I'm not explaining it well. Polisa, can you please assist me?
Let me assist.
Okay.
Because the student must remember, on Start Unit 5, we said we used only periodic inventory system, and perpetual periodic inventory system will use them when we are doing Start Unit 7. For this Start Unit 5, it's only periodic inventory system. There is no perpetual inventory system. If they go to Start Unit 5, it was 5.6.2 where we said the assumption on Start Unit 5 is saying we are only consider periodic inventory system.
Okay, no, I think now I got both of you. And I also understand we are talking about the trading inventory, the stock that we started with at the beginning of the term. This on the cash journal is the trade receivables, and this on the cash journal is the trade payables, and not just an inventory, because the other ones are received, the other one were paid. I think I'm answered for them.
Okay.
Thank
All right.
you. Yes.
Okay, I'm glad if you are happy with that. So for the last three general ledger accounts, I'm going to hand over to my colleague Xolisa, and then he's going to finish the rest. So I don't know, Xolisa, do you want me to stop sharing or?
No, can you please continue sharing, because I can't.
Okay, so you'll just tell me which one you want.
Okay, so we are going for sales.
Okay.
All right, cool. So if we look at the sales, guys, so the first thing we have to note is that we have sales in our trial balance, right? And that sales is sitting at 400,000. Now I hope I don't know if are you guys comfortable with which accounts sit on the debit side, which accounts sit on the credit side? Everyone more or less comfortable with that?
Explain, because that confuses me.
Yes. Okay, so
Not all of us. Not all of us.
Okay. Look, okay, I'm gonna explain it briefly, but if it starts becoming topical, then I'm gonna rather stop. But essentially, revenue accounts, right? So you've got your balance sheet, right? And then you've got items on your balance sheet, then you've got items on your income statement, right? So sales is an item on your income statement. So and sorry, the administrators, just tell me if I'm saying something the students haven't covered. Please just let me know. But sales will sit on your income statement, right? And you would also have expenses on your income statement, right? So things like purchases. So sales will sit on the credit side, and so therefore, when you look at the opening balance or the balance brought down, can you go to the solution?
Okay.
So if you look at that sales account, you see that you've got a balance brought down of 400,000, which is what was sitting in your trial balance, and that is on the credit side or the right-hand side, right? So that's where you start with your sales, right? And then you remember there's two ways to account for sales, right? You can either sell an item directly for cash. So in other words, if you sell cell phones, you sell the cell phones and you get the money immediately. The other alternative is to sell the item on credit. So in that instance, then you sell the item. So I get the cell phone, but I don't pay for it now. I pay for it later, right? And both of those transactions are going to increase your sales, right? And anything that increases your sales, then in your general ledger, is going to be on your credit side. Are you comfortable with that principle?
Yes, sir.
All right. So
But
then,
I have a question.
Sure.
Sorry.
So since we sell on credit,
Yes.
right? We sell on credit, we haven't received the money.
Correct.
Does that automatically still fall under, wouldn't it fall under sales journal and not the sales general ledger thing?
Yes,
know if I'm
remember what Dr. Beta was saying in the beginning, right? You've got your primary book. So where you initially record your transactions, right? That's so when you record your credit sales initially, they'll be in your sales journal, right? Or if it's your cash sales, they'll be in your cash receipts journal, right? And then you will prepare your general ledger from these books. Are you following?
Yes, sir.
So always remember that what we're doing in these general ledger accounts or these T accounts, we're basically summarizing everything that's in these separate journals, or yes, in everything that's in these separate journals. So yes, your credit sales, you would have recorded them in your sales journal, but now we're bringing them into the general ledger. Follow.
Okay. So
Yeah,
even though we
so-
still haven't received the money, so what happens if we don't receive the money from the debtors? So we'd have to
no,
get the sales.
no, you record your sale. When you record your sale, right? Okay, so if you've got a cash sale, right? You're gonna increase, your sales are gonna increase, and then your bank account is going to increase, right? If you sell on credit, your sales are gonna increase, but then the corresponding account is not gonna be bank, it's gonna be trade receivables, right? Or trade receivable control, right? So whether or not you receive the cash is irrelevant when it comes to your sales amount. The fact that you've made a sale, whether you've sold on credit, whether you've sold on cash, you must increase your sales, right? The difference comes in the balance sheet account that's affected, right? So if you sell on cash, you increase your bank account, and if you sell on credit, you increase your trade receivable control. That's the difference. If you don't receive your money, I think we'll deal with it later. But if you don't receive your money, then we're gonna record a bad debt and essentially write down your data. But that's something that's not for now. Okay, so you can see there that the amounts that affect our sales are going to be, firstly, our cash receipts journal. You can see that we've made sales of 18,630. Everyone comfortable with where that comes from?
Yes, sir.
Yes. Can you please go back to the cash receipts journal, or the section where the trial balance is? I also just want to see something before I ask questions, sir.
Okay, can you go, please, to that trial balance, Dr. Peter?
Somebody's phone is ringing. Okay, I'm just trying to switch between the screens. Just bear with me. I don't know what the technology is doing here.
Okay, so while ma'am is still busy, just to check if I was following correctly, you said on sales journal, that's where we add a transaction that affects sales, right? And I remember you saying that
Sales and cash receipts journal. Both of those journals, you record sales. It's just that in the one you've got the money, in the other you don't yet have the money.
Oh, okay. So both of them, regardless of whether you've added them on the CRJ and the CPJ, you still add them on sale.
Yes, they are both legitimate sales. The only difference is, have you received the cash, have you not received the cash? But they are all sales. So you take everything that you have sold, you must record it in sales.
Okay. I think now I get it, because now I also the amount, the 18,630.
So it's your 18,630 plus. Can anyone tell me which other amount we're going to include in your sales journal?
The 400,000 is not the 400,000.
Okay, yes, remember that's our balance, right? So yes, yes. So yes, the 400,000 correct. Which other amount are we going to include in our sales journal?
The trade receivables and the sales journal.
How much? How much is that?
So I think I have a question there, please, because on the trade receivables journal, on the sales journal, trade receivables inclusive of VAT is 16,100, right? But in your general ledger, you're only adding 14,000, which is exclusive. Why do you add it exclusive?
Okay, so income statement, right? You record the amounts. So the amounts that are going to go into your income statement, those will be exclusive of VAT, right? Your VAT will be a balance sheet account, right? So if you're selling an item and you're charging output VAT, that will, I don't want to call it a liability, but effectively it is a liability because you have to pay that money to SARS, right? And then on the other hand, when you make purchases and you claim input VAT, that's money that SARS owes you. So those transactions will be on the debit side of your VAT control account. But in this example, they've split out input and output VAT, right? So let's say you record a sale, right? So you sell an item, right? I'm going to speak in debits and credits. So let's say you sold the item for 18. Let's say you sold the item for 20,000, right? Then what you would do is, and that's cash. Then on the debit side, you're gonna have 20,000 of cash received, right? And on the credit side, you're gonna have two amounts. You're gonna have a sales amount, which is X VAT, and then you're gonna have a credit to VAT output. So anything that's going to affect your income statement, that will be exclusive of that. So that is why then the sales amount is 14,000, right? Following.
Yes, following.
Okay. Then,
if I may,
yes.
Isn't the in your case received, the 18,630?
Yeah.
Isn't that also inclusive of VAT that you, in actual fact, needs to pay over to SARS, the 2430? Shouldn't that also then be like in your sales journal, where is it? It is excluding VAT.
Sorry, you are getting cut.
In your cash receipt journal, 18,630 for sales, né? The VAT output, which is the amount that you need to pay to SARS, is 2430. Am I right?
Correct.
Yes. Now, this in your sales journal.
But let me put it to you this way. So you see, if you look at your sales journal, right? They've got a total amount of trade receivables of 16,100, and they've split it between sales and output VAT, right? Now, I want you to look at your cash receipts journal. If you want, you can say that your sales, what you've sold for, right, technically is the 16 and the 2430, right? So the amount of sales that goes into your sales in your general ledger is the amounts excluding VAT. Are you following? Are you following? Because remember that when we accounted for cash receipts, we accounted for the sales of 18,630 plus the VAT of 2430. So that's how much we've received in total for selling our goods. But then we've split it between what goes to sales and what goes to output VAT. Following.
So is the sales in the cash receipts journal also excluding VAT because you've put it in the VAT column?
Well, no, so okay, so again, it's so basically the 18,630 is excluding VAT, and then there's a VAT of 2430.
Okay, so then the 18,630 and then in your sales journal, the 14,000, you have to put those in your sales ledger because it's all exclusive of VAT.
Correct. And then the rest of it, the VAT amounts of 2430 and 2100, those have to go to your VAT control accounts.
Which is a separate ledger entirely.
Which is a separate ledger entirely.
But then, so.
Hello, how are you? How are you?
Hi.
Let's allow Mr. Makampa to finish the question, then we'll take the question after the presentation. Let's allow him to finish the VAT output and VAT input and also the sales account. Then we'll take questions after.
Because
Okay.
we're gonna show you how we record that. Okay.
Yeah, let's allow him to finish, then we'll take questions after.
Okay, I have one question then. Okay. So can you go to the sales GL? Okay, so can you see in the sales GL everything there? What's VAT? Everyone happy?
Sorry, say that
If
again.
you wait there, because
Excuse me?
I have a problem with the returns. Where do we put the returns? Because I thought if you take back the sales, then we must decrease the sales with the returns that have happened.
Can I take that? Remember at the beginning, I said that we have a separate journal, which is called the sales returns journal. So all returns go to the returns journal. They don't go to the sales ledger. So those are two separate ledgers. If we brought it then to the general ledger, then we would have a separate account for that. So from the required, the question didn't, let's just go back to the required. The question didn't ask for the returns journal, but it only asked for the sales ledger. So this question is only addressing what is listed here as required.
Oh, okay, no, perfect. Thank you.
It's a pleasure.
All right, cool. Okay, then the next question is, it wants the VAT input and the VAT output. So remember, it's not technically correct, but it's an easy way to think about it. The VAT in
Lisa, are you still there?
I think he's muted. Let me.
Sorry, my mistake. Okay, so I was saying that the way to look at VAT input and output, it's not 100% correct, but it's an easy way to understand it. VAT input is money that SARS owes you. Everyone happy with that? And then VAT output is money that you have to pay to SARS, right? So you can think of our input almost like an asset, and then you can think of our output almost like a liability. Okay. So if we look at that VAT input account, so we can see that we bring forward our balance of 25,000 there on the debit side. Everyone can see that. Basically, SARS owes us 25,000. And everyone happy? Okay, cool. Then we see that we've got 30, that 30 input VAT that were recorded in our cash receipts journal. Everyone happy with that? That was a 30 on the settlement discount, right? We call it input, but it's almost a reversal of output. But anyways, it's still fine, right? And then we have VAT input of 1,008, and that's from our cash payments journal. Right? Everyone happy with that? And then we also have VAT from our credit purchases, right? Of 1380, which is why the account name that we use is Trade Payables Control. Can you guys see that the 1008, the description is bank, right? And then with the 1380, the description is Trade Payables Control. That means that, so what you can distinguish there is that VAT relates to, the 1008 relates to cash purchases. And the 1380, that relates to credit purchases. Happy. All right, cool. And then we have the amount of 120, right? And that's from the purchases return journal, and that goes on the credit side, right? So essentially, if you want to call it a reversal of the input VAT, right, of 120. Okay, so then, yeah, then we close off our accounts, and you see that at the end of it all, SARS essentially now owes us 27,298. So therefore, we add VAT control on the credit side, right? Because we're basically showing with that balance of 27,298 that the debits exceed our credits by 27,298. That's what SARS essentially owes us at the beginning of the following month. Any questions quickly on VAT input? Was straightforward.
It was, but the bank, I don't understand how the bank gets to VAT input.
Okay, so remember, we made cash purchases in your cash payments journal, right? Remember, can you show them the cash payments journal, Dr. Preacher? So you remember we made cash purchases, right? Of which the purchases were 7,245. The VAT element of that was 1,008. Everyone, okay, you happy with that? Yes. So therefore, what I'm saying is that the 1,008 is the VAT input that relates to your cash purchases. Then remember that we made credit purchases. We bought on credit. We bought 10,580, right? We bought 10,580, 9,200. Yeah, there we go. Bought 10,580. Just go a little bit down. So you see that we purchased 10,580, and we split that between purchases of 9.2 and VAT of 1,380, right? So the VAT input that relates to those credit purchases, that is your trade payable control. And then the one that relates, you see that 1,008 that relates to cash purchases. So that one there is related to bank.
Hello, sorry, sir.
Yes.
Sorry to disturb. There is a mic that is on, so it's disturbing. You can't hear you. I can't hear you clearly because there is someone whose mic is.
Can you mute your mics, guys, please?
So I just want to know, why are we using bank instead of purchases for that 1,008?
No, can you see that? Can you see from the bottom 1, 2, 3? Can you see that there's three? Can you see that that first block with purchases of 7,245, trade payables of 6440 and 1008.
Yes, I saw that, but my misunderstanding is the we purchase and then we must pay 1008.
No, you purchased 7245, right? With
Yes.
VAT on that 7245, there's VAT input of 1008.
Yes.
You understand?
But now, why are we using bank when we put it under your debit?
No, it's just a reference, right? So in your description, you are referencing where that amount comes from. You understand? Because think about it this way, debits and credits. When you make a cash purchase, right? Remember that the balance sheet leg is going to be what? It's going to be your bank, right? Or let me say you're gonna credit your bank. Let me put it that way. But what are you gonna debit? You're gonna debit your purchases, right? And then you're going to debit what else? You're gonna debit your input VAT. So maybe let me put it this way, right? You would put whatever the contra account is. So if your debit is going to, so in that transaction where you're crediting your bank, right, and you're debiting your purchases and debiting your input VAT, right? So on the debit side, you've got your purchases, you've got your input VAT. The contra account there is going to be bank. If you look at your purchases, remember your purchases, right? Can you just go quickly up to or down to, do you see purchases, the 7245? Do you see that the general ledger there that says purchases? Can you see that?
Yes.
Yes, I saw that, sir, but
Yeah, but
my
look at the
question-
contra, look at the contra account there. It's bank. Why is it bank? Because you debited your purchases 7245, right? You debited your input VAT 1008. Your credit, your contra account was bank. Are you following?
Okay, but so you can't use purchases as the account.
No, because that's not the, if I could simplify it, when I say contra, I mean the account on the opposite side, right? So input VAT is being debited, right? In this transaction.
Palisa, can I please assist you? I'm sorry to
Yes,
interject.
yes, no, go for it. Maybe you can explain it better.
Okay, so remember when we purchase something, can I please use the example of 1,000 rands before I can even come to this? When we purchase something for 1,000 rands, and let's say the VAT on that amount is 1,150, the total amount that went out of our bank account is 1,000 rands. So we need to take out that 1,000 rands as a credit. So our bank account is going to be credited with 1,000 with 1,000 rands. Now, on the debit side, the purchase amount is 1,000 rands, but that 1,000 rands is made up of two accounts. So the first account is this one, which is the purchases account. So we are going to have, if we're using the example of the 1,000 rands, we are going to have the 850 here, and then we are going to have the 150 here to make up the 1,000. Our purchase is still 1,000, but it's split between two legs because we already have the contra, which is the 1,000 that has come out of the bank account. Now we need to balance. So at the end of the day, this 7,245 and this 1,008, this is the total that we incurred in terms of purchases. But the only difference now is that the 1,008, we can claim it back from SARS. So we are only going to record this as purchases and take this to our VAT input account. So the reason why both of them are debited is because it's the purchases, but it's just on different accounts. So when you add the debits, it must be the same amount that you incurred for purchases. So that is why the VAT and the responsible account would have the same balance or the same side. Does that make sense?
Yes, Doctor. I'm just a little bit puzzled why you using the word bank instead
Sorry?
of purchases. I'm just a little bit puzzled why you using the word bank. The word
Instead
bank
of
and not
purchases.
purchases.
Remember,
Yes.
when we purchased out of the bank account. So out of the bank account, we took out 7,245 plus 1,008, and we purchased. So now when we record, we are going to allocate now to the relevant or responsible accounts. So we are only going to allocate this to the purchases account, and we allocate this to the VAT input account. When you trace this back, the total of these two amounts, you're going to find it in the credit side of the bank account. So that is why it says bank, because we purchased from the bank, but when we account, we need to separate the VAT. Does it make sense?
Thank you, Doctor.
Okay.
Yes, yes, ma'am.
Dr. Sibanda. Dr. Sibanda, just to add on, we would also try to say, if we were supposed to show the bank account, then he would see
Sorry, am I the only one who can't hear?
Can we hear you?
Well, let's continue. We lost Mr. Maraisa.
Yes, I think
can I please just comment a quick one?
Good evening.
Yes.
Okay. I don't know if I'll be correct, Professor. When I was taught earlier was that if we hear the word of cash, check, and credit card, that means the bank is involved. Is that correct? Is that a correct statement?
Yes, it is involved.
Okay, thank you. Then I think it will answer the question for the gentleman who was asking why the bank now have to be shown there, because when we purchased, then we used cash. When we use cash, that means the bank, then it needs to be because it needs to be reduced, which is on the bank on the credit side.
Correct.
Yes.
Yes.
Okay.
So
Thank you.
so the thing is, in the bank account, we recorded this amount as one amount, right? We recorded it as total payments of 17,973. But that 17,973, it also included 7,245 in purchases, and it also included 1,008 in input VAT. It's just that we only show the net amount that we paid. Okay. Let me just move on to output VAT quickly.
Can I just ask before we move? I'm so
Yes,
sorry.
Cool.
So I just wanted to understand the flow of recording the transaction in our, let's say, cash payments journal. So if you are recording a transaction in your cash payments journal for 20,000 Rand, in your first column where it is your bank that is being credited, you are putting 20,000 Rand. Then you put in the VAT column, you put whatever the amount of VAT is. And then in your bank account, did I say that twice? You would have to put, at some point, you would have to take the amount that you paid minus VAT, right?
No. In your bank account, when you pay, you pay the purchase and the VAT, right?
Okay.
So what goes out of your account is the amount for the VAT and the purchase price of the item,
Okay.
right? So when you think bank, that's the total amount. You don't, your bank is never net of VAT. You understand?
Okay. And then when you put that, then let's say you've purchased inventory for 20,000 Rand. Do you
Yes.
again put the total amount and then subtract the VAT in that journal, or do you just put the total amount X VAT?
Well, in your bank, you are going to take out the whole amount, right?
Mm.
So you're purchasing something for 20,000. In your bank account, 20,000 is going to leave your bank account, right?
Mm.
So therefore, the amount that goes on the credit side of the bank account is going to be 20,000 Rand, right?
Mm.
Now, in accounting, of course, you need a debit and a credit. For every debit, there must be a credit. So so now we've said on the credit side, 20,000 Rand went out. On the debit side, we need 20,000 Rand as well, right? That 20,000 on the debit side must be split, right? It's going to be split between the purchase price of the item and its VAT. Do you understand? And the combination of the purchase price and the VAT must also equal the 20,000.
Okay, so both in your bank and then in your, let's say, inventory, you are going to replicate the same transaction just on the contra account.
Well, in your in your purchases and in your input VAT, yes.
Okay, perfect. Thank you. Sorry about that.
Okay, cool. No
Just a
problem.
quick one, please.
Sure.
No, this one is just a comment. I'm following quite correctly. It's just a comment maybe to improve in our next classes. Like for instance, now we are looking at the VAT input journal, which contains the data from the top. Like to keep on scrolling up and down for us. Hey, sometimes can we please try and use the split screen, because sometimes while other students are
Yes.
asking or trying to figure it out to see the data, you need to see the 20,000 where it's coming from. Now to go up and down, sometimes maybe please use maybe the split screen so that you can see everything.
I agree with you. It's just that also, I guess maybe we're also new to this way of presenting. So I think that's something we'll take into account definitely next time.
No problem.
And
It
Yeah,
should be very
most
convenient.
certainly.
Mr.
Yes,
Kolisa,
I agree. Yes?
remember we sent the questions to students when we sent
Yes.
the announcements.
Yes.
They must, before they come to class, they must print the question. Because we sent the question to them via the announcement. So it's important for them to print the question before class.
And also to attempt the question as well, because so that you're
And
familiar
attempt
when we
it.
present. Yeah, because sometimes if you come to these classes cold, then everything is new and it takes longer to follow. Whereas at least if you've read the question and you've tried, then you can compare what we say to your attempt. Okay, guys, let me move. Yeah,
Noted, thank you.
Sure. Can I move on to the output VAT and then I can take questions at the end? Okay. So remember we said with output VAT, right? I said technically it's a liability. So you owe SARS money, right? So when we have a liability, we bring our balance that we bring down is on the credit side, right? So 52,174, that was in our trial balance. And we bring it in on the credit side, right? That's our 52,174. Everyone happy with that? Okay, cool. And then can somebody tell me then, where does our 2430 come from? Just one person to tell me, where does the 2430 come from?
comes from
Receipts journal.
yeah, receipts journal.
Cash receipts journal. Everyone happy with that? So that's the VAT that we have to pay because of the sales, because of the cash sales that we made, right? And that we find in the cash receipts for 2430, right? Okay. I want to know, where does the 15 come from?
From the cash payments.
Which part? Which part of cash payment?
Trade payables from the cash payment journal.
It's a discount that you give.
Okay, that's what I wanted to hear. It's the input VAT on the
discount that you receive.
Why is it 15?
Oh, what says output VAT?
It's output.
On the cash payments journal as an output VAT.
It's the output VAT on the cash sales made on the cash receipt.
Okay. No, it's not that. It's got nothing to do with cash receipts, guys. Look at you see the second column from the right. What is that description there?
Sorry, if I think it's that 15 rand is like discount. The 15, it's the 15% of the discount that we gave to the client.
No, it's not. It's not the settlement discount that we gave, guys. We didn't give the discount. What happened? We received the discount.
Discount that we received.
Correct. Settlement discount received from which journal?
Cash payments
journal.
From the cash payment journal. Okay. That's the 15, right? Then the 2,100, what is that?
Sales journal.
It's the VAT output from the sales journal.
It's a VAT output from the sales journal. Okay, happy. Now let's go to the debit side. Where does the 45 come from?
It comes from the sales.
It comes from the sales journal.
Output.
Okay,
Journal,
so we're happy that because the sales have returned, the amount of output VAT that we owe SARS is less. So therefore, we're reducing this liability account on the debit side. So happy with the 45. Okay. Sorry, does someone have a question? Okay, so then we see that in our VAT output account, our liability account, we see that our credit balances, what we owe to SARS compared to our debit balances, what we technically SARS owes us, although not really, exceeds by 56,674. And that's where we have VAT control carried down, 56,674, which means that we owe SARS in the beginning of the next month, the amount we owe SARS is 56,674. Okay, any questions on this one?
Sorry, sir, can you just repeat that again, please?
Okay, so which one? The part about the VAT control carried down?
Yes, the part about the VAT control carried down. Can you just repeat that, please?
So what I'm saying is that, remember, this is a liability account. We owe this money to SARS, right? For the receiver of revenue. We have to pay this output VAT, right? Now, all the transactions that give rise to output VAT, right, which is usually your sales transactions, right? And of course, this discount on this cash payments, but mostly the transactions that relate to sales, those are the ones that increase your output VAT. So that's all on the credit side. You guys see that. And then any transaction that reduces what you owe, that goes on the debit side. So if I'm not mistaken, the 56,719 minus the 45, right? That gives you a balance owing to SARS. So in other words, if you have to produce your trial balance next month,
The amount that you will show as owing to SARS on your output VAT is the 56,674. Everyone understand that?
Yes, sir.
Yes, sir.
Any additional questions?
Yes, just want to say in terms of the output on the sales returns channel.
Yes.
Why is it VAT output? Was my understanding, or maybe my confusion is, whenever you are returning something, and then sometimes the statement might say that you are issuing a credit note to that person who is returning something.
Yes, yes.
And then the amount is going out. Why is it when that is not treated as if cash is going out of the business?
No, remember that no cash is leaving the business here, right? So we're in the sales returns journal, we're recording transactions that essentially we're reversing a credit sale that we had made initially, right? So remember, initially we sell on credit, we're gonna debit our trade receivables, right? So we're gonna credit our sales, and we're gonna credit output VAT, right? Now, if you reverse those transactions, right? So now the sale is being returned. Remember that when we made the sale, we debit trade receivables. Now that we are not making the sale, we credit trade receivables, right? And then initially we credited sales and we credited output VAT. So now what are we going to do? We are debiting sales, reducing sales, and we are debiting output VAT, reducing output VAT. So therefore, that's why that 45 is on the debit side, was reducing that output VAT that you initially said you owed, but you realized that the customer returned the sales. So now you obviously don't owe that anymore.
No, it makes sense. Thanks.
Any more questions?
Sorry, sir. Please can doctor go up a bit? I just want to see the option of VAT inputs, because I think I got a bit lost with the credit side. I understand the debit side, how everything fell into place in the calculation and so forth. I just wanted to just double check it.
Yes.
So we got the total of 2748. The 120 we had minused it to 27,418, right? That's how we got the 27,298. Just to be correct.
The 27, yes. So what you're saying is that, remember, we look, if we think of it like an asset, money we are owed, right? The total of the debit amounts, because remember your asset increases on the debit side. So the total of those amounts that we are owed is that 27,418, right? But then there is a 120 that we are technically not owed anymore, right? So we're reversing out that 120, right? Because we returned that item, so we can't claim the VAT anymore because we have returned that item, right? So therefore, that 120 then reduces the amounts that we are owed, right? So we owed 27,418, and then I don't want to say we owe, but we no longer owe the 120, right? So then the balance is an amount that is owed to us of 27,298. So therefore, in your trial balance next month, you're gonna see a balance of 27,298.
Okay. All right, correct, Seb. Thank you.
Hi, sorry, sir.
Yes.
I have
So it's not a question, but can we kindly have the solutions placed under announcements?
That's more of an admin issue. Can someone help me
hello.
out from the lecturers?
Hello,
Yes.
Mr. Yeah, the solution is under additional resources on my UNISA.
Okay, thank you so much.
Thank you.
I have a question about sales.
Sorry?
Yes.
Oh.
Sales return. Why we didn't debit the sales return? And also the cash sales. Why does it increase the VAT amount? But
Why
then
does
the
cash?
yeah, the CRJ,
Yes.
that one, 630.
Yes. The 18630. What about it?
Right.
Sorry, I'm struggling to hear you. Hello. Can anybody else hear?
Nope.
Sorry,
Unfortunately
Mama,
not.
I'm struggling to hear you. Then I have to move to the next question unless we can hear you. And next question.
I just want to check
Sorry.
if you
Yes.
can you hear me?
Yes,
If
I
you
can.
now take this exercise that you just did, the VAT input is 27,418, and if you check the VAT output, which you owe SARS, is 56,719. Am I right?
No.
So if you go further and
No.
say
No.
VAT pro,
No. I want to correct you there. It's 20. It's not 27,418. It's 27,298. That is the balance. That is what we are owed.
27,298.
That's what we
Now,
are owed. Yes.
If you do a further calculation and you say VAT control, isn't that the amount that you then supposed to pay over to SARS?
No, the amount that the net amount, if you want to call it that, right, is SARS owes you 27,298 and you owe SARS 56,674. So on a net basis, when you file your VAT return, the amount that you are going to pay is I don't know if someone has a calculator, but 56,674. And then we minus 27,298. So the net amount you're going to pay over to SARS is 29,376.
Okay, so
are you following?
Can I just
Yes.
add on? Can I just add on to that? So
Sure.
the whole idea of preparing the VAT input account was to find out the net VAT or the net VAT input or the total VAT input after all the adjustments. So you see that this VAT the balancing figure goes to the VAT control account. And then the VAT output was to determine the total VAT output. So if you go to the VAT control account, you are going to have the VAT, this amount on the credit side, you're going to have that amount on the debit side. And then the difference of the two amounts is what then is payable or refundable to you. So the whole idea for you to do this was to find the net input after all the adjustments and the net output after all the adjustments. Then you can determine what is payable or refundable.
So in this case, then we have a net payable of 29,376. That makes sense. Next question.
Okay, can I ask
I got cut off earlier.
Can I ask something? Hello?
I was asking why the cash sales includes the VAT. Why it includes the VAT output amount.
All sales, all sales, cash sales
Because
and credit sales, all sales incur
yes,
VAT, all of them.
I understand that. I'm asking why the cash sales, the 18,630 is the amount that includes the VAT, but then for credit sales, it's the one exclusive of the VAT output. So I wanted to ask, is that the rule? Because I thought we had to remove the VAT when we.
Okay, can I please answer that? That
Yes.
18,630 that is there is an error. The amount that should have been there is the amount excluding VAT, because the VAT portion then goes to the where does it go? To the
VAT output.
To the VAT output. So that amount was supposed to be the amount exclusive of VAT. We are going to adjust the question and then we give you an updated one after correcting this error.
But
and then the debit side of sales account, there's no sales returns.
Remember, we said that here we are answering the required, so we didn't provide all the questions. We only provided what the question was looking for. The question was only looking for the sales journal. Had they requested us to prepare the sales returns journal, then we're going to have that journal.
Oh, okay, because I see the VAT input in this solution, the VAT output account includes the VAT from the SRJ, from the sales returns journal. So why did we record the VAT, but we didn't record the actual?
Because the requirement asked for remember the required didn't ask for a sales returns journal, but it did ask for a VAT output and VAT input, right? So you can't have a VAT account that is incomplete. You understand? Whether the question asks for remember the examiner can ask for whatever they want. If they don't want a sales returns journal, they don't have to ask for one. But you can't then say because they didn't ask for sales returns general ledger that your VAT output or your VAT input mustn't include the VAT related to those sales returns.
So would it be incorrect if this is like asked in an assessment and I recorded the returns and the purchases returns, the sales returns and purchase, would it be incorrect? Because
it would be
that the returns are included. It's part of we made
let
sales.
me put it to you this way. I think in an exam it will be clear, right? It would be far more clear. You would be told, you'd be expressly told that sales returns, you can write them off against sales, right? Or you must have a separate account for sales returns.
Okay.
It's not technically wrong. Like I hear what you're saying. So it's not technically wrong, but you know, it's ideally the sales returns should have its own general ledger.
Oh, okay.
But that would be made expressly clear in your exam. You wouldn't have this.
Let me come in because again, remember, if it's not required here and you decide to write it yourself, I mean, that would be maybe good for you to know what would happen into the sales returns journal, but it won't be marked. It will just be your rough work, sort of.
Okay.
Yeah, so that you can remember that from the sales returns, then we must have a VAT input or VAT output. So it would just be for you to remember what the whole process would be. But it won't be marked. Then it means it would be just taking off your time. Thank you.
Oh, okay. Okay, thank you so much.
Any more
If there are no
questions?
further questions.
Hello, Doctor. Hello?
Hi. Yes, we can hear you.
Yes. I've been trying to get in, but there were a lot of questions. But yeah, I think that
Okay.
at last, yeah. So, on my understanding, regarding Doctor, the first when she was telling us about the tax, or I mean the SARS whatsoever, the 15%. So any money you receive, you get in the bank, and then it's the VAT or the SARS, they take it out. Okay, let me put for an example. Okay, I got my the pay slip, my pay is going to the bank. After that, and then there is a gross, and then there is deducted everything there. And then after that on the net, you find that there is the money SARS that is taking there. And then at the end of the year, there is something like there is a document that are coming from like RP5. So we need to go to SARS to claim that money. And then there is a time there you find that when you go to claim SARS, we are owing SARS. So I don't know, maybe there is something different, or it's similar to such things like this.
Okay.
No, I wouldn't. Oh, sorry. Go for it. Go for it.
I was gonna give it to you. Okay, so how the income tax is structured, we have we have a legislation which is called the income tax, which does with your income taxes that are related to your salaries and all those kind of things. And then we have a different legislation which is called the Value Added Tax Act, which deals with value added tax. So value added tax is a tax on consumption of goods and services. It's only applicable to buying and selling of goods. It has nothing to do with your salary. So the only time that you pay VAT is when you go to a supermarket and buy something, or when you are a business and you sell goods or services. That is the only time that you pay VAT, but your salary has nothing to do with VAT. So the concept the concept that you are saying, that at the end of the period where you file your returns, then you look at your pay as you earn that you actually paid and what you were supposed to pay, then either it's payable or refundable. It's the same thing with VAT, but the only difference with VAT is that now you look at your purchases and you look at your sales. And the VAT Act is only applicable, like the refundable and the payable is only refundable to those that are registered as VAT vendors. So you as a consumer, yes, you as a consumer, if you go to ShopRite and buy something and pay VAT, you cannot claim that VAT because you are not registered as a vendor. The only time when you can claim VAT is when you have a business, you meet all the requirements to register for VAT, then you can claim. But in just me and you in our normal capacity as consumers, we cannot claim VAT. So it's only for vendors.
Okay,
so
thank you very much. 100%.
It's a pleasure. If you go through your study guide, let's see if I have the study guide. I had it somewhere. Just bear with me. I'm just trying to find where I had it opened. Okay, I think it's here. Can you see my screen with the study guide?
Not yet. I don't see anything.
Can you see it?
No, I don't know. Maybe there's someone who see it.
No, we can't see anything. We still see the old.
Still there, yeah.
No, not yet.
Okay. Okay. Let me try again. Just bear with me. Can you see the screen?
Yes, now I see it.
Okay, so if you go down,
Yes, you can see the screen.
Okay. I'm just scrolling down. Okay, so here from 5.10, it gives you, it's not detailed because remember this module is accounting, it's not tax. So it gives you just a brief background of how the concept of VAT works. So it gives you the things that you can pay VAT on there and then how it's leveled. So I would encourage all of you to read that just so you have an idea of what is happening when you're doing these questions. It's not much reading, it's about 3 pages that you need to go through. So if you go to 5.10 of the study guide, you will find all the information there.
Okay, thank you very much, ma'am. Thank you.
Okay.
Thank you.
Okay. Any other questions? We have gone over 20 minutes beyond our time. Are we all good?
My question will be quick. I just got a bit confused between, you guys said different things. Sir said one thing and then you said one thing. At the beginning with bank and the CRJ, when we calculate the total, you guys said in the sales that VAT was excluded. Sir said VAT was excluded. You said VAT was included. And then when we calculate the total, why is it that it's different from how we do it normally in the CRJ? Over here, we add everything, including our discounts and our VAT.
I'm not quite I'm not quite getting your question. Let me go back to them. Okay, just bear with me. I'm going back to the question. Please let me know if you can see the question.
I can. This is the solution.
Okay, this is the solution. Where is the question? Can you see the question?
Yes.
Okay, so which part are you referring to?
In the cash receipts journal, we had to calculate the total for bank, right? When
Yes.
we do our normal journals, it's that bank is the full amount, right? And then sales is the amount excluding VAT. But then over here, you guys calculated everything for bank. You calculated sales plus trade receivables plus settlement, this a minor settlement, and then plus VAT. And then when you guys were explaining, I think someone asked it, and Sir said that this 18,630 is excluding VAT, but then you said it was including VAT. If it was excluding VAT, like Sir said, shouldn't bank be the amount plus VAT?
Okay, so here what I said is what we are trying to determine is the amount that we received in the cash in the bank account. So we are trying to determine the actual cash that we received in the bank account. So if we sell, when an amount includes VAT, we must account for the VAT, for the sales and the VAT separately. Ne? So ideally, this amount must be an amount that is exclusive of VAT, such that when you add this amount and this amount, you get the two amounts. So if you take a calculator and you calculate VAT on this amount, you are going to get this 2,430. I think someone calculated. So when I was explaining the solution, I said, let's go back to the solution. I said this amount here should be the amount that is exclusive of VAT. So I don't know in this question whether it's just a coincidence or it's just a scenario that was just created to say, okay, the sales is this, the VAT is that. But the assumption is that this amount must be the amount exclusive of VAT, so that when you add this and that, you get the amount that is inclusive of VAT.
Yeah, it has to be that way. I mean, even if you look at your cash payments journal, the way that they've laid it out, they in terms of your payments, they are splitting between the purchase and the VAT, right? So the amount that you pay is split between your purchase and your input VAT. So you would have to, I mean, that you would have to assume that your total amount that you've received for sales would be your 18,630 plus your 2430, split between sales of 18,630 plus output VAT of 2430. But maybe it's something that we can improve in the question as well, just to make it clear so that students understand.
Yeah. Okay, thank you.
Okay. Any other questions? We are 30 minutes over time. No questions. So guys, before we end the session, I'd like to encourage you to participate on the e-tutor groups. So we post questions, we post stuff, but the participation is very low. So the same energy that you guys had in class today, please put the same energy on the e-tutor, on my UNISA. Ask your questions. If you ask your questions, we will respond to your questions and engage with you. But it's very difficult when we are the ones that are always posting stuff and you guys are not even responding to the things that we are posting. So please work with us. If we post something, please respond, take part in the activities, and let's keep the conversation going on, because you can see that we are available, we are willing to help you, but we need you to work with us so that we can help you. That's all from me. I don't know if my colleague has something else to say.
Hi, ma'am. The e-tutor groups are the groups that have been allocated to, like the 9E and all that we find under the FAC2, 1502 groups.
Yes, that's correct.
Sorry, ma'am.
Yes.
Can I ask, please, do you have recordings? Because even wrote in the chat, I'm struggling to get even Saturday's class. Because sometimes you find that you're in the class, but the network is not good, maybe because of the weather. Where can we get the recordings?
Okay, our colleague is going to answer.
The recording is under our YouTube channel, FAC 1502 YouTube channel. Let me post the link here, how to join our YouTube channel.
Okay, thank you.
And also, guys, I think, sorry, go for it.
I have a question regarding the e-tutor thing. I've asked, I wanted to set up, I've asked the e-tutor if we could schedule a meeting and I was just ignored. So I don't think on my side, my e-tutor is responding on my side. Or maybe, I don't know. Because my question is posted. I posted it on Tuesday or something, and I still haven't received a response. So I don't know, maybe I'm just not, I don't know how to use the platform.
Mr. Stolle.
Okay, thanks, Mr. Banda. What is your Twitter number?
I think it's Rachel Koza or something.
9E. That's it.
Let me just check. Yeah, 9E.
All right. No, it's fine. I'll attend to that. Please, students, if you have any challenges with the e-tutors, you must send me an email. I will attach my email on the chat there. And when you send your email, please do not use your Gmail or Yahoo account. Use your ESA email account. Then I'll be able to assist you.
Okay, Zine.
Sorry, I've already asked the question. I just put my hand down.
Oh, okay. I think there is no further questions. So from my...
Sorry, Professor.
Okay.
Okay, I was asking also, I saw, I'm just left behind with other classes because I saw the classes is at 1 to 3. At that time, I'm at work. Then, yeah, it's difficult because there's somewhere I have questions that I cannot even answer because 4 o'clock I'm knocking off. Then from there I have to work. I think this time for the classes from 6 to 8, I think it will be best.
Which classes from 1 to 3? Which module?
I think it was, I'm not sure if it was bank reconciliation or adjustments.
No,
between
the
two.
bank reconciliation was from 6 to 8 on Monday.
There was one, I think it's adjustment, is the adjustment one. That was at 1 to 3.
That one, it was because it was holiday. That's why we put it 1 to 3, because it was on holiday. It was on the 21st.
Okay.
Only if it's holiday or Saturday, the classes are during the day. But if it's weekend, the classes are during the day. But if it's during the week, always it will be from 6 p.m.
Okay, thank you very much.
That's why it is very important to read the announcements, because you guys, you are not reading the announcement, because we are always addressing questions we already posted via our announcements. That's why it's very, very important to go and read the announcements we posted on the module site.
Sorry, I just want to check to ask you if one has failed that first assignment. If I failed the first assignment, is there any chances that I will pass the final exam?
Yes, because those assessments contribute towards your final mark. Like we said, assessment 1 contribute 15%, assessment 2 and 3 both contribute 25% towards your final mark, and the last assessment, which is assessment 4, contribute 35%. And also, if you miss assessment 2, you can go and write elective assessment 5. Because remember, assessment 2 is only one attempt. If you miss it, you can go and write, because there is no extension on assessment 2, because there will be elective, which is replacement of your assessment 2.
Oh, okay. Yeah, my question
sir?
was on the.
Can I please ask a question?
Come again?
Oh, can go ahead.
Hello?
Sir, can we please get the slide? Hello? Hi, sir. Good evening.
Good evening. How are you?
I'm fine, thank you. How are you, sir?
I'm good.
Sir, can we please get the slides for the class that was on the 21st? We never
There's no
got to
slide,
finish
because
that
remember
class.
we did the question. The question is from under additional resources. And also on the announcement I posted, I attached the question, and the solution is there under your additional resources.
Sir, I meant for the class we had on the 21st. The presentation for the 21st
of
We
March
put, there is
class.
no slides. We
Can we
didn't
have
put
the
slides
slides that
under.
were on there? Because we never got to finish that class.
Or maybe I will check and put
sorry,
the slides.
Brother Joseph.
Yeah, Mr. Maraisan.
I think you just give her the link to the YouTube channel to see the video.
She's asking about the slides.
But I think she wants the presentation that was done on the 21st, which is on the video.
The presentation, yes, please.
Yes.
Oh, that
on
one
YouTube.
is under. If you go to our YouTube channel, yes, the video is there under our YouTube channel, 1502 YouTube channel.
Okay, thank you, sir.
Oh, thank you.
Hang this down.
That we are done for the day.
Thank you very much. It was a pleasure engaging with all of you guys. Enjoy the evening.
Thank you. Bye.
Thank you. Bye.
Bye.
Thank you. Bye.
Thank you. Bye.
Bye.